36 minutes after 8 o'clock this morning, the IRS is recommending that you file your taxes early this year. And this morning, we want to help you avoid some of the most common mistakes that people make when they file. Nicole Walton, a senior accountant with Bodine Perry, is joining us now live via Zoom. Good morning. Thanks for being with us.
Good morning. How are you?
Wonderful. Thank you. So we know taxes can get really complicated. A lot of people choose to do them on their own. So what are the most common mistakes that you see them make?
The most common mistakes that we see people make is either they're missing or incorrect social security number, misspelled names, incorrect filing status, married filing jointly versus single, or married filing separately, math errors, including entering incorrect numbers into your tax software or something like that, the figuring of the credits or deductions, providing incorrect bank information for your direct deposit or of your refund or payment on any balance due for them to debit the account, and then the completing of the premium tax credit form that would be needed if you have insurance on the healthcare marketplace.
And also probably adding to that list perhaps is you have to remember to sign it, right?
Yes, ma'am.
Right? And sometimes people get through the whole thing and say, oh, phew, I'm done. It's confusing. There's a lot of lines there. You can see how some things would get missed or inappropriate or inaccurately written down or transcribed. I wanted to, though, circle back to you, though, on making a mistake in terms of your filing status. If you are married, is there one way to file that's better than the other, whether jointly or separately? Is there a rule of thumb on that?
It really depends on what works best for everyone. For some people, it works better for them to file jointly together than it does for them to file separately. The catch is with married filing separately, if one spouse is able to itemize because it benefits them better, then the other spouse also has to file itemized as well, whether it benefits them or not. So that could make it to where that person who doesn't have as many deductions would potentially have a larger tax bill. But we evaluate that for our clients all the time.
So, of course, no one wants to be audited. If someone makes a mistake on their taxes, maybe accidentally leaves something out, what should they do?
So if you make a mistake, you can file an amended return, and those can be filed electronically now. They didn't used to be able to be done that way. You used to have to paper file those. When that is completed, if you owe an additional amount, they'll charge you interest on the amount due, but no penalties. If you omit any taxable income from your tax filing, you would potentially most likely receive what the IRS calls a CP 2000 notice, notifying you of the additional items that are taxable and that were omitted from your return. If that amount is significant, you may have a substantial underpayment penalty. And what you would do is you would either decide whether you want to agree or disagree with the changes that they've made. If you agree, you would be billed the additional tax, interest, and any penalties that would be due. And if you omitted income or made an error, it is better to file an amended return than to wait for a notice from the IRS.
Yeah, the fines and the penalties is what makes everybody nervous because it can really get to be really a large amount of money. So does making a mistake increase your chances then of being audited? Because I could see how somebody maybe realizes, they receive a tax form in the mail, after they've already filed and say, oh, I forgot to include this. Should you go back and amend, or should you just say, oh, well, maybe they won't see it?
So if you make a mistake, it does not increase your exposure to an audit as long as it's not an extremely large mistake. Like if you omitted thousands of dollars, then yes, that could potentially in the end lead to something. But if it's like $20 or something, it's not going to make it to where you would have an audit.
Nicole, thank you. Great information. Really appreciate your perspective this morning.
You're welcome.
And be sure to join us tomorrow on the morning show as we continue to answer the most common tax questions that many of you have, from saving money on your tax bill to understanding how your child tax credits will factor in this year. That's a big one since many of you received that. So be sure to join us tomorrow at 8:15.